about humanity. It's all about humanity. About humanity. It's all about humanity. About humanity.
And we are live. Good evening, everyone from the UK. It is Brian, the UK Bitcoin Master, back as always every Monday and every Thursday with my UK Bitcoin Master live show. Welcome to the channel, everyone. Don't forget to smash that like button and share this out. I would greatly appreciate it. Today is the 18th. No, it's not. It's the 14th of October, 2021, and as always, people, strong Bitcoin hand, diamond hands. That's the name of the game on this show. I'm really excited to have a live guest for you all this evening, so do make sure you're ready for this one. Very, very quickly, if I can, a quick shout out to some of my regulars. It is great to see Vinny in the house, Buffy W, my daughter, my lovely wife, Elaine, Mrs. W is in the house with us, Matthew Underhill from the Bitcoin Book, welcome, Alexis Menard, Johnny Midas coming in there from California, I believe. Buzzers in the house. Who else have we got? Yorkie Bitcoiners with us. MS BitEth. Bitcoin to the moon down in Australia. It is great to see you all in the house. Very, very quickly, you know the drill. No financial advice here, people. It is just me sounding off. Do your own research. Get in the rabbit hole. Only make a buying decision if it feels right for you, and only invest what you could realistically afford to lose. Do check out my work. ukbitcoinmaster.com is where you'll find every video I've ever done. I've been live streaming since April 2018, twice a week, pretty well every week, even on our honeymoon cruise, etc., etc. I went live. If you want to check out the interviews that I've done to date with some of the, in my opinion, greatest thought leaders in the Bitcoin space to date, then check out bitcoininterviews.com because they are all over there. And finally, I keep bleating on my show that we are in this era of layer 2 solutions. Lightning is growing at a phenomenal pace. Use my tippin.me address to practice sending some Lightning Satoshis. Somebody sent me 10 sats yesterday. I think it was not even a penny. So you can literally set up a wallet on your phone, practice sending Lightning around, because in my opinion, just my opinion, it is the future. So I don't do this channel or run this channel for any type of financial gain. That is down there for anybody that wants to practice moving Satoshis around. Let's get that out of the way. Very, very quickly, if I may, price 57.1. Not so much worried about the price here, but draw your attention over here. Currently, you're getting 1,749 sats per your dollar. I remember a couple of weeks ago that was over 2,100 sats. So what you've got to get if you're in this and you're looking to stack Bitcoin is that as the price goes up, you get less and less sats for your buck, if you want to call it that. So you know, we're under 2,000 sats now. There's going to come a point, I believe, not too far in the future where you can have parity, one sat, $1 down the road a bit, but it really is coming, I believe. So there we go. Right, what I want to do without further ado is introduce you to my live guest. I'm really excited about this one. This guy is a multi-millionaire. He's a tech entrepreneur. He sold his company Yashi for $33 million. He's got his own story to tell, and that's what we're going to flesh out over the coming hour. His own podcast, and you should check out his podcast. He's got a great podcast. He's interviewed people like Anthony Scaramucci from Skybridge, American Hodl, Preston Pish, even young Will Clemente, to name just a handful of serious Bitcoiners in the space. So without further ado, Jay Gould, welcome to the show, man. Great to have you in the house.
Brian, thanks for having me.
Yeah, superb. Now, people, I've had some audio issues, so if you can pop something in the chat if our audio is out, and Jay's quite loud at the moment on my settings. I've got him up pretty loud, so hopefully we should be balanced out. If I need to back mine down a little bit, I will. So, Jay, thanks for coming on the show. We were having a bit of a chat off air, and you know I'll repeat what I was looking to do. I'm just aiming to lend some credibility to me. I'm just some crazy Brit that goes live twice a week, and without any financial background, without any background in things like Bitcoin, finance, or anything, it is easy for somebody to say, who's this crazy idiot? What the hell's he going on about? Why should I listen to him? So by bringing some really big and influential players onto my show, I guess it lends some credibility to what I'm trying to say, and I guess I'm saying it, if you like, through their lips. So number one, welcome to the show, Jay. Number two, can I ask, would you be happy to tell our audience maybe a little bit about your background, how you got into all of this, how it evolved? I'm sure they'd be interested to know.
So I'm a tech entrepreneur. Started building like websites, internet companies in the early to mid 2000s, sold 3 companies. The last one you mentioned was Yashi. I built the first video sharing site before YouTube was around in 2004. That got sued by Universal Music. Unfortunately, went bankrupt on that company. But I sold a business to the company that got sued. So my company I sold, and then the acquired company that I stuck with got sued. Prior to that, I built a dating website, and I also had a social network. So, and then I'm also an angel investor in tech companies, and I'm in about 100 angel investments and have 6 unicorns in my portfolio.
Oh my Lord. Dear, oh dear. So how did this evolve? I mean, was this out of school? Did you know you wanted to be an entrepreneur? Did you have anybody saying to you need to have a business? I mean, how did it all come about? How did it all start for you?
Sure. It's complicated. I mean, in the 90s, I was in high school in the mid 90s and early to mid 90s, and the internet was just kind of taking off. Yeah, I was lucky. My parents, I begged them. They got me a computer when I was a little kid in the late 80s, early 90s. And we had an Olivetti, actually. That was the name of it. And, we had Prodigy early on, had AOL early on, messed around with IRC. It was like always early on the internet stuff. And it just was very drawn into it for whatever reason. Had a website built, I guess, 94, 95. And, and I was just really interested in it, and it was like on a CompuServe server, but it was going back, and then in college, you kind of messed around, built some stuff. But I was also an athlete, right? So through high school and college, I was an athlete, played football, and kind of wasn't that focused on tech stuff. I was more focused on girls, I guess, back then. So
it's understandable.
Trying to impress girls. It's always trying to impress girls. But I wasn't very good at it. But anyway, so that was in the 90s, and which was most of my college, because I graduated college in 01, so late 90s, and then I don't know. I guess it just I got a job out of college. I worked for CDW. You might have heard of the tech sales company. Made sense because I had a passion for that kind of stuff, and I was like, let me go work here. I got fired. I didn't stay there very long.
Been there and done that.
Pretty much. Yeah, I'm pretty much unemployable. This is the only job I had as an adult, actually. I had summer jobs when I was in college, but it's the only full-time gig I ever really had. So got fired. And then I just realized I was already doing all the internet stuff, and it was doing well. So I just stuck with it, and it kept growing, and it just evolved into a career, I guess. At the time, my mom was like, I was living at home out of college and get fired from a job. Just imagine this. I can imagine with my kids, get fired from a job, and I'm like in my bedroom talking to people in Pakistan and India all night long, building websites and shit. And the mom just wakes up at like 5 a.m. to go to work, and she still sees the light on in my room. What the hell are you doing? You need to get a job. What are you?
Get a proper job,
You're
yeah.
on unemployment or something. You know?
Yeah.
It's like, this is not why we wanted you to go to college, you know? But I kept telling her, I was like, I got a plan. You just got to stick with the plan. She's like, I don't know what your plan is, but if I come back from work and you haven't gone on a job interview. So that was me in my early 20s. And it just evolved into me finding the right things, going down the rabbit hole. And within the tech, not Bitcoin yet, and it just like anybody who goes down a rabbit hole, you become an expert the more time you spend with it. And I spent thousands and thousands and thousands of hours over the years. Sold my company in 2015, the last one, right? And prior to that, I was first introduced to Bitcoin by reading a blog from Fred Wilson. Fred Wilson is a VC at his blog is actually a VC, so it's funny I said he's a VC.
Okay, yeah.
But it's avc.com, vc.com, and he's a venture capitalist. His firm is Union Square Ventures in New York City. He's probably one of the most prolific investors for early stage companies up in New York. And I was always like, a fan of his, I guess you could say. I just read everything he wrote, and he was talking about Bitcoin really early, like 2012 or so. So I didn't buy it. Like, I didn't understand it. I didn't understand why they were talking about it. And I just chalked it up as they're investors. They would love to see this asset class grow, the underlying asset being Bitcoin as a cryptocurrency.
Yep.
Because they're clearly going to build things that are within the ecosystem that live around it, like anything else that has an ecosystem. So if you look at like the iPod, and then it evolves into the iPad and the iPhone and all the I's, right? But there's an ecosystem with iTunes and app stores, right? Yep. So like, I'm thinking they're building the ecosystem. Like, so, okay, whatever. They're in a game that I'm not involved in. It's like asymmetric information problem. Yep. So I just was dismissive of the whole thing. I was like, they would love to see this coin work, but it doesn't make a difference if the underlying asset of the coin does this or that, because they're investing in the businesses like Coinbase and stuff, right? So it totally escaped me. I didn't understand it. Nobody was talking in 2012 about the Fed. I shouldn't say nobody. The vast majority of the conversation was not about the Fed, about interest rates, about inflation, about a hedge against inflation. That was not the discussion or the narrative back then. It was like this cryptocurrency, was not what it was about. It was mostly highly speculative, in my opinion. And the market cap was so low that it was really risky at that time. So the first purchase I made was in 2016. I started buying in 2016, 17, 18. And it really never really clicked to me until maybe a couple of years ago. Like in 2018, did I just lose you? Or are you
no, I just made you full screen.
Oh, okay. I just saw something move. I'm sorry. But it really started to click in 2018. So in 2015, we sold the company, and then they kept doing these rate hikes. You might remember, right? Quarter point hikes the Fed was doing. And I was actually very happy about that at the time because I'm sitting on a lot of money, right? There's no interest rates. And I'm like, it'd be nice if we get back to like 6%, savings rates and like, money markets and bonds and things like that for the cash portion of your portfolio, right? And anyway, so as it's creeping up, we got to like around 3% December 2018. And then they did that last quarter point rate hike, and the market responded to the point where Jay Powell had to go on 60 Minutes and kind of talk down the markets. And I was like, what is happening here? That's when I realized it's like the tail wagging the dog. Like, who's controlling this? Is it the market participants or the Fed?
Yep.
And I think we obviously know now it's not the Fed, right? And that made me start to say, why is the Fed responding to the market? Oh, wait a second. Oh, wow. We're hanging by a thread, right? We're still hanging by a thread from 2009. That was a big aha moment for me. And I started to look into all kinds of other things at that point. So that when you start to do that, you start to realize that the narrative was also being spoken to about that way. Bitcoin was being spoken to within a narrative that way, which is about inflation hedge and all this kind of stuff by 2020, 2019. But that was not the case in 2012, at least not my experience. And I've met some people that said, so-and-so was talking about it. I'm like, well, how did anybody know about that guy? Because I didn't know about these people talking about it. So my experience was different than people today. And everybody says, am I late to the game? Is on Bitcoin? You are not late to the game on Bitcoin. The one example I always give people that was easy for me to understand is they think they're late to the game because there's this unit bias on the price, right? So we're seeing the price now at 50,000 plus, right? So they're like, I can't afford that. Well, you might not be able to afford $50,000, but Bitcoin is made up of Satoshis, right? That's why I love that you were talking about Satoshis, because at some point we'll talk about it as Satoshis, not Bitcoin, I think, right?
Yeah, I think
but
so
the
too.
Satoshis, yeah, it's coming at some point, right? But the Satoshis, right? You have to go back and you have to say to yourself, like, that's the atomic unit of the Bitcoin. So the atomic unit of $1 is the penny. The atomic unit of Bitcoin is the Satoshi. There's 100 million of them versus 100 pennies for the dollar, right? So when people can understand that, you say, okay, so I could just buy some. The fractional ownership have to grasp that first. And now, okay, we can grasp the fractional ownership. And then you want to get past that barrier of like the psychological thing of like 57,000, and we know it's going to like parabolic numbers, right? But the reason I say this, I go, if you look at Berkshire Hathaway, he doesn't split the stock, so that's a supply constraint, right? It's the same thing here, right? He has X number of shares. He's not adding to the shares and splitting the stock all the time, right? If you look at things like Ford, Chrysler, et cetera, their price is like $20, $30 a share because they've split 5 to 1s and 2 to 1s and all those kind of things over the years, right? So by messing with the supply, in this case, the shares of the company, they keep the price down. So it's a psychological barrier. That's not what Warren Buffett wanted to do. He actually didn't want the price to be lower because he's like, okay, let's keep the same number of shares and let the price run up over time. And we'll have real investors, not traders, in my stock. That's what he was doing. So that's why his stock is like $400,000 per share, right? Which is what you're going to see in Bitcoin because nobody can mess with the supply. Even if we wanted to, you can't do it because you'd have to get 51% agreement and it's not going to happen, right? So anyway, long story short, the tech background, entrepreneur, investor, and came into Bitcoin in 2016 first purchase.
See, this is what I find so exciting because if you've got a bit of vision, and you've got to have some vision, you've got to sort of see something and know where something's going to go intuitively. And I think so few people have got that vision. And when I came into Bitcoin, I just saw that. I saw it divisible, and I thought, if this does, and I, basically said take over the world, if you want to call it that, the financial world, you're going to get to a situation where you're going to have $1 is one Satoshi or something of that nature. You're going to have people that are paid their salaries in maybe 100,000 Satoshis or whatever 50,000 Satoshis, when it's dollar parity. And I've got to say this, I don't come from any type of financial background. I left school at 50 with no qualifications. I hated school. I didn't learn about money. I didn't learn about history. Hated history. And yet you step into Bitcoin and all of a sudden you're in that rabbit hole where you can't leave it alone. And, instantly I devoured the Bitcoin standard. And I've never read a book in my life unless it was something I was interested in, and now I'm going through all these books, Bitcoin billionaires I love that book about, the Winklevi, love them or hate them, and Charlie Shrem in the early days and everything that was going on. And, here we are today in 2021. And I remember when I bought my first Bitcoin in 2017 at $2,000. It was about 2050, I think. I bought my first Bitcoin. And, I had this dream of, wouldn't it be amazing if it went to 20K? And we all have this, and then we hit it, and then we start thinking, wouldn't it be amazing if it went to 50K? And here we are. And wouldn't it be amazing if it did reach 100K? And it's coming, and 500K. And, I watched a pod today or yesterday, they were talking about one Bitcoin between, $1 and $20 million in the future. And it's you can't comprehend that. But when you look at the asymmetric upside of being involved in Bitcoin, you understand the narrative of you being reckless by not having a position in Bitcoin. Whereas when I got in, you're being reckless having a hedge in that. Yeah. How do you see it all changing? Because it is evolving, isn't it?
Yeah, it's Bitcoin Tina says this all to me all the time. I talk to him a bunch. A lot of respect for him. He says that it's growing from an illegitimate asset into a legitimate asset. So that's what you're speaking to. There was a time like in 2012 when I was first introduced to it, 2013, 14, looking at it, it just, to me, it was not a legitimate asset. The market cap was too small. It was manipulatable at that time, if that's a word. It could have been manipulated is what I'm trying to say. Because large nation states or others could have attempted a 51% attack years ago. There's no way to do it now, right? Because the cost from the proof of work, all the servers and the ASICs, you can't even get your hands on enough of these things to try to procure them. And I don't think you can. At least Jimmy Song has told me it's not.
We've gone past the 51% attack, haven't we? You'd have to have nation states investing. Yeah.
And they would have to invest a tremendous amount of money, and they'd have to take control of the. They'd have to take control of the manufacturers and say they're all coming to us, nobody else. And like where's that happening? I'm not buying that.
No, me neither.
Right? So
me neither. Yeah.
No, never going to happen. It's not possible at this point. So just think of it as the internet, right? The internet protocol is TCP/IP, right? And so the money protocol for the internet will be BTC, right? So I just view it as an internet protocol that you're able to own ownership in, and we weren't able to own ownership in SMTP or TCP/IP, right? You don't have any stake in that. What would that be worth today if you did with the amount of activity? Holy cow,
I actually say, wouldn't it be nice if we'd had the vision back in the mid-90s to get in and buy some shares in these companies, or, I don't understand all this share stuff. I've never been in business like that in my life. But, to have a position in something like that in the mid-90s, and where it's gone today. What you've just said is really profound for me. TIC, what did you say? TCP/IP. And now BTC is the same thing for money. I really like that. That has really struck a nerve, struck a chord. So am I right in saying that when we go back to the 90s then, in terms of tech, was that being in something around the internet? You were doing something around what was starting to happen with the internet, and that's where your success came from? Is that right when I say tech?
Yeah, it was. I mean, you're building websites and stuff. So I was building websites, and I had e-commerce websites. I had social media type of websites, online video. The last thing I sold was a video advertising platform.
Yep.
So we created technology to allow you to deliver an advertisement before video serves. Not that unique in nature. There's other people that did it, but we were unique in our narrative and the targeting capabilities and stuff like that. But where I ended versus where I started is like way different. Like when we sold the company, we were doing like tens of thousands of ad calls that we had to make decisioning on hundreds of servers globally in a distributed network that we created with our own load balancing, et cetera. And we had to do that per millisecond. I mean, it was just off the charts. Now, what I built in the beginning, it was like one website on a shared server, like Value Web or something like that, like back in the 90s. So it's crazy how like things evolve and you learn as you go, but everything is an iteration, is what I always say, right? Life is about it's all iterative, right?
Yep.
So
Yep.
you do something and you don't have to expect to have all. It's just like now, like, well, I don't know a lot about Bitcoin. I can't buy that till I learn. You'll never know everything about Bitcoin. In fact, you'll never know everything about anything, right? You just have to accept that I'm never going to be the smartest person in the room. That's at least how I've accepted it. If you think you're the smartest person in the room, look around. You're probably the dumbest person in the room.
Oh,
right?
Actually,
that's what I always say.
I always finish my shows with a quote, and I've got one lined up for the end, and that is so in line with what you've just said. That is absolutely spooky that you've just said that, particularly the conversation you and I were holding offline that we'll keep private. That's really spooky. So can I ask then, because for me, as this regular guy, that is now talking to a multi-millionaire, take me back to your businesses. Did you have employees? I mean, I'm assuming you had employees, and stress levels, and there's an old adage, isn't there? If you want it done, do it yourself. If you want it done right, do it yourself. How did that play out? Was it stressful? What about your family? I'm just interested in how people that are monstrously successful in business manage all of. Now, I've just heard you say, I don't know if you said it on here or offline, I can't remember, but you said you're always on Clubhouse, you're on somewhere doing something within Bitcoin. So I'm assuming you are still right in amongst it all, doing loads and loads of hours, but it's completely different to running a company. So what was that like?
So when I started, I was building websites by myself, and I had contractors and stuff like that. I would hire and places like Upwork, which I think used to be Elance back in the day, and freelance.com and stuff. So I used to find people globally throughout the world, work with me. I've developed relationships, and over the years, a lot of the same people still I'm friends with today, and I still work with some of the developers and graphic designers, et cetera, like all the people I've worked with over the years. So that evolved from being this reminds me of like Robert Kiyosaki, Rich Dad Poor Dad. He's got the cash flow quadrant. So there's E, S. E is an employee, S is self-employed, B is a business owner, and then I is the investor.
Brilliant.
So you kind of want to work your way through that, right? I love that book. Yeah. I like it. I think that Robert Kiyosaki is just brilliant in general. And some Bitcoiners don't like him so much because he does talk about gold, but he's a smart guy.
Very.
He's just old. But I never made it to B. I always say that to people. I went from an employee, as I told you, and I got fired, right? Then I went to self-employed, which is the earlier years when I had people working for me. And then I thought I was a business owner, right? least I was lying to myself.
But doesn't he talk about 500 employees plus if you're in the B quadrant? I think he does talk
and I'm
about
not there.
Yeah.
And I was I never made it there. I just had Jeff Booth on my show. He'll be coming up on my show in a couple of weeks. And Jeff wrote the book, The Price of Tomorrow, right? And
I've just booked him in as well. I've just booked him in too.
Oh yeah, he's amazing. He's amazing. But we talked about this, and it's like I told him, I was like, I skipped right past the B. I went right to I, right? I went from self-employed, and he's like, wow, you were a business owner. I was like, actually, I'm sorry, it wasn't Jeff. I'm mistaken. It was John Warlow. He's the author of Built to Sell. Great book, by the way. I read his book. Actually, it was very inspirational in me changing the format of my company quite a bit, and ended up selling the company as, I think, a result of some of the narrative shifts and stuff that he helped me with when I, not personally, but by reading that book. So he was a great inspiration to me. And I encourage everybody, you should read that book too. If you have a business, Built to Sell, it's a great book. But it started off where I was an employee. Then it started off where I was essentially self-employed, right? And then I thought I was a business owner because I had employees working for me and had an office and all that kind of stuff. And it was growing. Then I had investors and all. It just slowly happened over time. When I sold the company, I just skipped right past ever growing I could have taken Yashi because we were talking to investors, like private equity firms and stuff. We could have gotten a large amount of money that came into the company. Some of the money would have came off the table. So I could have taken some personal money for myself on that investment and then put the rest in the company. I opted to sell the whole thing. I had multiple, and I was like, let me just go with selling the whole thing. But one of the options on the table that we were exploring was take the money, put it in the company, and then grow the business, to your point. I don't know what would happen. You don't know the future, but with the way interest rates are, with the money printing, and with all the SPACs that have happened and the trajectory of the growth rate we have, we'd probably be a public company today. I don't think I would be happy doing that. Frankly, I'm very happy where I'm at. So I have no regret. I don't think I'd want to be a CEO of a public company. In fact, I probably wouldn't have been a CEO of a public company. I probably would have brought in a CEO to run the company. It's not what I want to do in life. But yeah, like, how does that happen? That's 20 years. I can't tell you how it happened. It's a long time and a lot of evolution, right? A lot of pivots and changes and meeting people. But at the end of the day, it is all about the people. So a lot of people, I go on shows like this, or I talk to people privately, they're always asking me, like, what did you do? What's your mindset? All that stuff's important, undoubtedly. But you're nothing without the people you surround yourself with. The number one thing that you can do for yourself is, life is about choices. Make the right choices of who you're spending your time with and who you're consuming. Consuming is listening to, like this show and others, or what are you reading? Are you on YouTube? Are you on podcasts? Or are you reading? Instead of watching, I don't know, Lost or whatever the new TV, I don't watch TV, so but whatever the new TV shows are. So don't watch TV. You know, when your wife is watching TV or your husband's watching TV, keep the laptop open and start doing your research. Put your earbuds in and listen to a podcast. Learn, right? Try to consume the information around you from smarter people that have figured it out already. And then you can change your framework of thinking, because you are the average of the 5 people you surround yourself with the most. And even if you can't physically get yourself in the same room with people that have had those experiences, you can certainly read from them.
Oh yeah, the information age that we're in, you can find out anything. You can literally learn, from your laptop, can't you? My lovely wife's in the chat. I wonder if her eyebrows are raising. She sees me, she puts a meal in front of me, and I've got my laptop there, or I've got my iPhone on with my headphones on because somebody's gone live. I do try to have a balance in my life. This is my second marriage. My daughter, Buffy W, is in the house from my first marriage. And I try to learn from, some of the mistakes I made in my first marriage to have a nice balance. At the end of the day, Jay, I don't want to get to the end of my life and just wish I'd have spent more time with my family and more time with my wife, etc. Having said that, I don't know how you're at around all of this, but I find myself having to choose a selection of the people that I follow and pods I'm in. I can't delve into Clubhouse or Twitter Spaces because I know Pubby's on there and Anders and people like that, and it'll just swallow up my life because everything I watch, you're sucked into it. And I send a message to Elaine, you got to watch this. By the way, my lovely wife's in Bitcoin with me. She's got her own. She's building her own DCAing as well, which is beautiful. My daughter Buffy's in the house. She's got her own as well. And I'm working with her. So it's a real family affair. Sometimes we get my granddaughter on, but she's not on tonight. So the point I'm making is, with your life as it is right now, your family, are you trying to create a balance? Do your family know dad or hubby's just got to go and do what he's got to go and do? How's that play out?
So one of the reasons why I wanted to sell the company was that I wanted to spend more time because I'm very obsessive compulsive. And so I sold the company 6 years ago, and
Oops.
my oldest daughter was 3 at the time, you
Yep.
know? And so at 3 years old, like the first 3 years of her life, she didn't see dad that much. I was working a lot, working 7 days a week, 10 to 15 hours every time, you know?
Yep.
And
Yep.
even if people passed away in my personal life, family members and stuff back then, I would go to the wake, but I would go right back to work, morning and afterwards. I was just obsessed. I mean, and my perspective was, and it's the wrong perspective, right? But my perspective was, the business journey is a marathon, and we're all on a marathon, and I'm competing with people on this marathon. So am I going to run the marathon, or am I going to fucking sprint the marathon? And
Yep.
I was sprinting the marathon because I
Yep.
know it's a race. And if
Mm.
they beat me to a new feature, a new product launch, a new whatever it is, we lose. It's zero sum, right? I lose
Yep.
customers, I lose vendors, I can lose investors, employees to another company that's succeeding. Like all these things were like, you're just constantly in competition with the people around you, with the companies around you. So I was absolutely obsessed with that. And, to a detriment to some family members and some friends. I lost some friends actually.
Mm.
But you know, I would do it again because I completely transformed the landscape of my kids and grandkids' lives for the rest of the time. Right. So like I had to do that because I was, to your point, like, you know, you you refer to me as a multimillionaire, which is funny. Because that was the goal. I wanted to make a lot of money. Right. But it wasn't for the sake of money. I view the money as freedom. Bitcoin is freedom, right? And I had Breedlove actually recently just recorded with him. So he calls it, I'm a freedom maximalist, right?
Yeah. Love
I
it.
like that.
Love it.
Actually.
I love
I
it.
like
Yeah.
that because
Mm.
at the end of the day, that's what it's always been about for me. Before I even had a wife and kids, I was thinking about someday I want to get to a point that when my kids are older, they don't have to worry about the basic needs. That's done, right?
I was going to say, if I
My
can
parents
just,
didn't
if
have
I,
that opportunity. Yeah.
let me just interject for a moment, because I think, I don't know if it was Robert Kiyosaki that said this, but you know, having a excuse me, having a pile of money is totally useless. It is what the money can do for you and others that gives the money its value. So what you're saying, I'm taking from that, is if you build this company, if you build this business, your children don't need to worry about money. They can live in a lovely home. You can have nice holidays, maybe private schools, or whatever it is that was important to you. That's where you're coming from, correct?
Yeah. It basically at the end of the day, money is energy, right? I mean, Taylor talks about this all the time. Bitcoin is energy, right?
Yep.
It's a
Yep.
consumption of energy.
Yep.
So that's what money is. Every dollar represents every Bitcoin. It all represents energy, right? At the end of the day. So if you have enough that you don't have to expel more energy to get more of it, like why are you out there doing more then? You have to really ask yourself that actually. If
Yep.
you've got to the point where you have hundreds of millions of dollars in wealth and you're still running really fast on the hamster wheel to accumulate more, why? It will perpetually grow. Your expenses are fixed and your wealth is grown, and you have an amount of growth on that wealth. Like, what are you really chasing? You got to ask yourself that. I'm not
Yep.
saying it's right or wrong, but you
Yep.
got to really question, have I shifted the goalpost?
Yep.
I thought this was about freedom. I wanted to get money so I didn't have to work anymore. Why am I still working? Because you became obsessed with the journey, which is fine. If you enjoy it, that's great, right?
Yep.
But then you got to think about the people around you. You weren't just doing it for yourself. That's a selfish act. You were doing this in a selfless way. You were
Yep.
doing this because you wanted to give up because of the stress, and that has a toll on your body, right? So it has a toll on your mind, it has a toll on a lot of things. I mean, I got gray hairs, right? But like, right?
No
Like
hope for me then.
it comes to you. It comes to you hard, right?
Yeah.
Look at my beard; it's all gray. But why are you doing it? I was doing it so that my kids have a better life, right? My parents, my mom had me at 19 years old, and my stepfather who raised me was a carpenter in a union. My mom cleaned houses. We didn't have any money, and so I got very lucky because I had these certain types of opportunities available, and I made the right decisions, the right choices.
Yep.
And those right choices led to amazing outcomes. But it doesn't always work that way for everybody, right? Unfortunately, because this is where the luck is in life. Some people have done I have friends that did the exact same stuff that I did, but they just haven't gotten a big exit, right? They didn't sell for a lot of money. That being said, they didn't make all the exact same decisions that I made. We all make different decisions. I've decided earlier in my career, I've raised money from investors. Those investors became very good friends. They introduced me to other people. That expanded my network. Your network is your net worth, right? Like all these kind of things happen as a confluence of events. And it wasn't like I was some diabolical person, like, oh, I know what to do to get wealthy. It just happened like just through reading and learning and talking to people and networking. That's kind of how it happened.
So it's interesting you say that. My network is my net worth, or the other way around. And my net worth is. I only heard that the other day, and you beat me to it. But I think that's absolutely superb. And they say that your lifestyle, your income is the sum total of the 5 people you probably spend the most time with. So when you come back to not watching telly, now look, sometimes we sit and relax in the evening, and we might watch something. We watch things that are based on true life, but generally, I just want to be with and doing this show with you. I am spending an hour with somebody who's hugely successful, and hopefully with our conversation we pass hints and tips on to anybody in the audience, any one of you that are finding this in the future, that you're never gonna, if you're relying on the lottery, 14 million to 1 to make you a load of money, and then if you do get it, it's all gone in 3 years because you've blown it all, you're never going to get anywhere. So I think success in life is about, you've got to give something up to get it. Now, if you're sensible in what you give up, and in my other business we talk of a day being 3 quadrants of 8. So you've got 8 hours of sleep, 8 hours of work, and 8 hours of stuff. And most people, that 8 hours of stuff doesn't enrich their lives in any way, shape or form. But if you move some of that 8 hours to, learning, being on pods like this, my goodness, and particularly as, I want to get onto Bitcoin now, because I believe that we're living in a time that is unprecedented. Saylor says it, doesn't he? I think it was Saylor said, what we're going through is something like a 1 in 10,000 year event. It's up there with, invention of the motor car and all that sort of stuff. So let's start talking Bitcoin. So you got into Bitcoin. Just take me on that journey of discovering it. What did you do? How did all that start to play out? And let's get to where we are now.
Yeah. So for me, when I bought Bitcoin initially, like I said, first of all, there's like this thing in marketing called the rule of 7. It takes 7 touches with something before a customer buys, right? So it took me several touches, I think, before I started to see the light. And I told you the reason why I started to really understand it. I bought it before I understood it, right? And I think most people do actually. But yeah. So I bought it in 2016, 2017, 2018. And it was like, I told you, at the end of 2018 is when things were really starting to make a little more sense for me. Okay, wait a second. This could really go up if that keeps happening. That being the Fed and the interest rates and all this kind of stuff. I wasn't thinking about it like that previously. Previously, I was viewing it like I had viewed it. I'm an investor. So I'm investing in a lot of things, right? So I'm investing in real estate, private equity, public markets, et cetera, commodities. And I was in a lot of different things. You have to be, right? And traditionally, you have to be, I should say. Today, I don't know, you have to be, but because all that shit's going to zero, right? Not zero, but you're going to lose its store of value over time, I think. But I wasn't thinking that way. So initially I viewed it as a trade, as an investment, right? Like anything else, like a stock almost. And I think most people view it that way. Particularly, we know they all do because we denominate the price of Bitcoin in dollars. Why are you doing that if you have no intention of selling it?
Yeah, absolutely.
Right. Why are you pricing it in dollars? Because you're pricing it in what you can understand for value, which is how we denominate a unit of account as dollars. That's the way we think about it. And people are literally thinking I can just sell it for more money in the future is what they're thinking. But that would be a grave mistake if we're right about Bitcoin, right? Because it's about the amount of coins you own. They ain't making any more of this stuff, right? So this is it. So in the future, what is that value? That value is off the charts because it won't be a hyper Bitcoinization. It will have a unit of account in the future, and everything will be priced in Satoshis, houses, groceries, etc. So then it's about how much do you have and can you earn it and all these kind of things, right? And so anyway, so I got in 2016, purchased as an investment thesis essentially. I realized by 2012 to 2016, man, I was an idiot. That was like that's kind of the reason why I first purchased it was I knew I screwed up the trade, right? I was like, God, I got this wrong, but I'm not leaving any more money on the table. I got to get in. I can't not be in. I got to get off zero. That was 2016, 2017, 2018, 2019, 2020 is when I started to lean in heavier because I started to realize, wait a second. And the narrative started to change for me. It's like, okay, this is an inflation hedge, That's when it started to really click for me.
And it's really interesting, isn't it? Because, I, like most, when I first heard about it, I jumped straight in and I think I worked it out about 3.5 hours after my friend had finished talking to me on Skype. I think we'd somehow managed to get something linked up with local Bitcoins, and I bought a Bitcoin. And I think it was less than a week later I bought another 3 Bitcoins, and and then we had quite a period of time before we came in again and bought a load more in 2018, I believe it was. And even today, because I believe that it is going up, I am still DCAing what I can each month now, even though we've got, I mean, maybe as an investor, you would say somebody like me, you're absolutely crazy. But for me, I'm 62. I'm all in. It is this or nothing for me. I've gone through life with, we've always done okay. My wife and I, we've been together close to 20 years, and we've had 2 or 3 holidays a year. So we do okay on, what the earnings that come in. So if Bitcoin went to zero, we're actually fine. We probably cry and cry and cry, but we're absolutely fine in terms of, I see all these people that are over leveraged, etc., took out loans against it, etc. Well, Bitcoin would have to go down below 5,000 a coin for us to start thinking, oh my God, now we're out of pocket. So I guess we're in a bit of a unique situation there. But when I came in purely speculation. I can make some money here. Okay. All of a sudden now, my narrative is, I can actually change my family's future for generations if I do this right. So the next debate is, how do you keep hold of your Bitcoin but still leverage it to draw, some money out? There's loans out there, aren't they? You put your Bitcoin up, but I've got this issue around getting 6% return by holding my Bitcoin, and I own the keys, 200% a year on average. It's growing. So talk about all of that stuff for somebody like me, that it hurts my head how this is all going to play out. How do you see that playing out? Because, sorry, Jay, I'm pretty certain that, there's going to be a whole industry, a financial industry spawned on. Now we've got DeFi. I don't want to talk about that because I'm a Bitcoin only guy, but surely some DeFi, there'll be financial platforms and companies and industries built on top of this. And when do you think?
Yeah, so we already have Unchained Capital, BlockFi. There's some companies that are doing some things in the space. I think the big thing is when you see it, when you could start buying and selling your Bitcoin and custodying within places like Fidelity and Schwab and the banks, essentially, because they just passed something this past year where that is a possibility, right? So that's coming. So when that comes, they will have lending capabilities.
And is that because they got insurances?
I don't know that it's of insurances. I'm just saying that they're going to allow you to do that because you're a customer and you're demanding it. So they're not going to leave money on the table from a perspective of like, we can make money off of this. And I don't think they're going to make money. Like, let's just take a step back. If you look at Coinbase and Kraken and Gemini and all the different exchanges and Swan and brokerages and all this kind of stuff, they're making money on transaction fees, commissions, right? But Robinhood got rid of that for the stock market about a year or so ago, and everybody adopted it because it was like, whoa, we don't want to lose everybody to Robinhood, who's not charging a commission anymore, which used to be, years ago, it was very expensive. And then it got down to the point, it was like $9 a trade. And if you had large amounts of capital as a VIP client, it was like de minimis, maybe $2 a trade or something like that. And it got to a point where it was like zero, which was good and bad, right? So it's like nice to not have to pay the fees, but it was also bad because there's no how do I explain this? There's no financial reason to not day trade rapidly for low amounts, right? If that makes sense. So now you have retail investors on Robinhood stuff like swapping around and fractionalizing and buying things like Tesla. They couldn't afford it, but now you could fractionalize it. I could buy $50 worth of Tesla. And then I could flip it real quick and make 30 cents. And as long as I could afford the SEC fees were very de minimis, right? It's like 0.000002 or something like that. There's no commission, right? So that increases volume, transactions, and they're happy to do that at the exchange level. But they're not making any money on the transaction per se, right? There's no commission, but they make money in a lot of other ways, right? They can hypothecate your cash and your balance sheets and stuff like that. There's all kinds of other things, lending products, etc. So I think they're going to do the same thing and be highly disruptive, in my opinion, to all the cryptocurrency exchanges out there. When the Fidelities of the world decide, we're allowing this now, we're going to custody this now. And Fidelity is definitely, I'm mentioning them for a reason. They've been in Bitcoin since 2014. They actually mine Bitcoin. They have a whole crypto division for Bitcoin, right? So I think at some point when that happens, that's going to be it's going to change a lot of things. Number one, there's going to be a lot more demand and buyers that come into the market, I think, because they're already there, right? They're there already. These are not institutional money, like you mentioned earlier. These are just high net worth individuals or individuals that have a portfolio. We know most Americans don't. So this is a class of asset owners, essentially.
Yeah.
A new asset I can buy. Oh, it's so simple. I don't have to try to figure this stuff out. I don't have to do the cold storage, any of this kind of stuff, right? I don't know. I can't remember my own passwords to my email. You want me to remember passwords to Bitcoin?
Yeah.
They don't know what they're talking about. But, these are the kind of things you hear, right? So like that's going to bring adoption in. And then like anything, you buy an asset and it starts to perform. You start to learn more about it. You start reading like, wow, this thing's really going up over the last 2 years. I got to learn more about it. Maybe I should put more in it, but let me learn more. And then they start to realize I shouldn't have Fidelity custodying my keys. I should go to cold storage, right? Like all these things are going to happen. It's going to be highly disruptive. But the lending products, to your point, talking about that's going to come from those types of institutions that already do this kind of stuff, in my opinion. There's already an evolving ecosystem, like you said, within DeFi, but there's also ones that are focused on Bitcoin itself. That's going to continue to happen. I think those companies will get pulled in and acquired by these other companies and or merge with existing platforms like a Gemini or something like that. Or they're already doing their own lending products at Coinbase and Gemini, I guess. But I think that's what, so in the future, you don't want to sell your Bitcoin. You're going to be able to borrow against your Bitcoin. You can do it now, I think, right? But I think it'll be safer in the future. I don't know what they're going to do because you got to have multi-sig for all that kind of stuff. So you make sure that your keys are not getting stolen, or by the government or the institutions or whoever it might be, right? But anyway, but it's coming, right? So in the future, you could hold on to your own keys. And I think Unchained Capital has a product like this now.
They do, but it's not
like
here in the UK.
Yeah.
I guess I'm sort of coming from a UK perspective. You certainly got it out there, most definitely.
Yeah.
And I can
Multi-sig,
I can only see that expanding. Truth be told, so
Yes.
bring on the innovation. I think we're living in a time where.
But one thing I'll say, Brian, this is, and I'm not knocking the services. Like I think it's an evolving ecosystem. Just like I said much earlier in the interview, everything is an evolution, everything is iteration, everything is adapt, evolve, right? So we are where we are now. It will only be better in 5 and then 10 years, only better, right? But where we're at now, you got to ask yourself, if someone's paying me 6%, that means the other guy on the other side of the trade who's borrowing from me and paying me the 6%, he's making more than 6%. So you should ask yourself, what the hell is he doing? Are you comfortable with that risk that he's doing? Maybe you should be doing it if you're so damn comfortable with it. And if you're not, why are you lending him your Bitcoin? For 6%.
Yeah, this is the problem.
Think about that.
This is the battle that I've got going on now. Obviously, age is a thing. I'm sort of early 60s, and there's an element of we want to take something off the table because we want to go and see the world a bit, go and meet some of our friends that we've made, on social media, etc., and travel the world a bit. What's the point of having this great big pot of gold, if you want to, dare I say gold, and you take it with you in a brain seed? You don't want to do that. So for me, it is, I don't want to get rid of my precious Bitcoin. When you listen to Saylor, when you listen to the people, even you've just said it, don't ever sell the most pristine asset that the world has ever seen. Why would you want to sell that? I mean, example was a couple of years ago, I was going to buy a new Mercedes. And I said to my lovely wife, I said, we were sat outside having a glass of wine or something. And I said, look, what if I don't? What if I just hold the one I've got a bit longer and we put that into Bitcoin and let's see where it takes us in 2 or 3 years? That for that Mercedes is, I think, over 300,000 on its own now because we chose to put it into that pristine asset. And I don't think this thing's even started yet, Jay. I think we are this tip of the iceberg. I mean, we keep hearing about this hockey stick instead of the S-curve adoption. Are we going to ultimately see, the hockey stick where all of a sudden it just goes parabolic and keeps going? Can I ask, what is your take on, several? I've heard Preston talking about it, and I think Dennis Porter. I can't remember, but do you feel that we're going to see another? Dan Held, do you feel we're going to see another cycle, or are we going to do a super cycle? What is your view? I mean, I'm coming from a basic working class guy's point of view that all of a sudden, if something happens, if an ETF is approved, and all these big institutions start piling in, surely we're going to have this. Oh my God, I can't be left behind. Surely the dominoes will, I won't say fall, but they'll start to pile in. What is your take on this hockey stick versus S-curve?
So this is the institutional money coming in argument, and we want to front run the institutions. So Scaramucci, who he mentioned, was on my show. So he recently tweeted out, a lot of people say there's institutional money coming. He's like, I'm not seeing any institutional money. I don't know what they're seeing that I'm not seeing. And he knows everybody.
Yeah.
So it doesn't mean it's not coming ever. It means as of now, during this cycle, I think it was disrupted by the China FUD. So I think that's just what happened. People were probably working on doing this, put it on the balance sheet, and then they all got jaded.
Back burner.
Yeah. So they're like, you're on an investment committee for a publicly held company, or you're a board director or something like that. And you're responsible for making these decisions on your vote. And all of a sudden this thing drops by 50%. You're like, maybe we should just wait. Right? Like, I don't want to be the one that was responsible for that decision. And then our balance sheet drops by whatever, so I think there's some of that happening in the moment. If that didn't happen like the way it did in April and May or whatever, I think you would have seen a lot more adoption this year.
Yeah.
You're going to have it either way. It's inevitable, right?
Yeah.
It's inevitable. The question is on the cycle, right? Like I don't know, honestly, like nobody knows, right? There is a possibility though, to your point, that it just goes parabolic, right? There's no question about that. Because right now, if you're like Apple, as an example, like for them to come into Bitcoin, they have like $200 billion on the balance sheet. They'd have to buy like, I don't know, $5 to $10 billion worth of Bitcoin. Now they could do it. Michael Saylor bought a couple $1 billion over the last whatever. So it could certainly be done. They'd have to do it through OTC. They'd have to do it over a time period. They don't want to push the price up on themselves. There's a lot of reasons and ways how they'd have to try to get into it, but there's just not enough supply to go do it like that. There's no lump sum for them. And like if they did, the price would go parabolic instantaneously, and then it would drop because they're the buyer, right? So you'd have to be careful with that. But the question is, what happens if like Apple, Facebook, Tesla, eBay, just make up a bunch of companies, right? Like if they all decide within like a 12 to 18 month period to start moving money in rapidly because they're just getting panic into it, like a FOMO, yeah, the price can really get out of control. And then it becomes a larger market cap, 2 trillion, 5 trillion, 10 trillion. 10 trillion is a big number too. That's flipping gold, right? So you get to $10 trillion. I think at that point becomes a risk off asset. It's still perceived as a risk on asset by these institutions. I think it becomes a risk off asset as it goes higher. So that's a natural thing that it will start to just happen. The speed at which the adoption rate happens. The other thing is American Hodl said to me as well ago, because I build social networks and things that have network externalities.
Yep.
And this has network effect as well. And I kept saying, it's like, it's kind of like Facebook network effect or YouTube. And he's like, yes and no. And I was like, what do you mean? He's like, well, it's more like it's a network effect, but it's a monetary network effect versus population. It's not about the people.
Yep.
So while you and I and the people who do what we do are trying to get people in, right? Individuals, and everybody should get in, but the institutions are bringing the participants. The people, they don't have as many participants. The participants are the dollars. It's a monetary network. The participants are how many dollars are in the world. And as Saylor says, there's roughly, let's say, 400 trillion of those.
Yep.
Okay.
Yep.
So that can't go to zero, right? If you want to look at it from an inflation adjusted perspective, it can't go to zero. But if you look at real estate, like I don't want to say the dollars, but my house went up percentage wise tremendously over the last year. I mean, it's crazy, right? It was just ridiculous. And so, but that's only because the dollar is going down in value. So it's reflective in the prices going up. The price actually didn't go up. If everybody in the neighborhood's house went up by 50%, then did you make any money? No, you'd have to sell it and go buy another house for 50%. So
yeah, absolutely.
You can sell it, take the gains and buy something for less. Most people don't want to do that, right? But there's only so many dollars in the world. So when you look at what the potential is for this price over time, you literally just take the dollars that you think can move into Bitcoin and you divide by 21 million. That's the price for Bitcoin, right? That's how these guys get to these numbers. It's not that complicated to figure it out. But you just got to say to yourself, like, well, where are we going in the next 5 or 10 years and how do we get there? And it's like, as it starts to move up, Brian, that's where you start seeing other risk off, right? Other money that's institutional says, okay, we could put a 5% position in that.
There must be a tipping
that's
point.
A much larger market cap. Yeah. And I think it's around 5 to $10 trillion market cap. You start, like, participants will start, it's like dominoes, like you said before, they'll start falling. The dominoes will start falling. For some companies that are smaller market cap companies or more less risk averse, they're willing to take on more risk, they'll jump into this asset class earlier. Tesla makes sense. Microstrategy makes sense. The founders are tech guys, right? Like, it totally makes sense. They understand network externalities. They understand how things grow over time. They get tech. They're not worried about it. I mean, Jamie Dimon just came out yesterday, and I don't know if you saw his tweet, but it was like, are you kidding me? He's like, well, I don't understand this computer code stuff. And then a guy I'm friends with, like, posts, I retweeted it. You can go on my Twitter. He reposts, like, the code for, like, because he's like, I mean, they had 21 million. They could just do more. They say they can't, but can't they? And it's like, no, actually they can't, because you don't know shit about code. That's why you're saying this.
But surely,
I mean,
Jay,
these people,
surely you must have enough people around him that are clever, that should look in. He's got to be closing his mind to it.
There's a saying, and it's not his quote, but he says it, and I always quote him for it, is Bill Gates says, "Success is a lousy teacher. It tells really smart people that they're the smartest person in the room when they're not," right? And so if you've been very, very, and I've done this myself personally. I did this restaurant thing with my cousin a few years ago, and I was like watching other people do it. And I was like, they're not that smart. I could do better than them. I didn't know shit about the restaurant business. I got my face ripped off. Right? And I'm a pretty good business guy, but I didn't understand the restaurant business. And I admittedly say I made a mistake. I shouldn't have got involved. And if I did want to get involved, I shouldn't have got involved so quickly. I should have learned the industry more, all this kind of stuff. What he should just say, and what they should all say, Buffett included and all of them, I just don't know it. I can't comment. Don't say, don't have a position about something that you are uneducated about. It doesn't make sense to me. You know,
I just don't understand how someone like Buffett, with all of his smart business
rat poison
moves,
quote.
Yeah, I mean, why? It's not him and Charlie Munger per se. It's the team of people they've got to have around them. Must be leaning on them, saying, "Why are you ignoring this?"
But if you look at Buffett, he's never invested in anything technology. And people will say, well, didn't they invest in Apple? No, he didn't invest in Apple. One of his people, I think it was Wagner, one of the guys that works for him, was like, we should do this Apple investment. And then he is the one that's promoting it now because he realized this is a great company. And he made sense to him because there's physical products that he can see. He's like, oh, this thing? Yeah, everybody has this thing. They show me the statistics on it. Yeah, everybody's got it. Oh, it's great. It's got everything in there now. That makes sense because it's a physical thing. He can understand physical. And they pay a dividend. I don't think he would ever approved it if they weren't paying dividends still, right? Because he wants that cash flow. And he's just an old school thinker. He's a value investor in a world of network externality. Just not the right framework of thinking.
The trouble is, these people have got a lot of influence, and they have a huge reach in terms of the people that look. I won't say look up to them, but look up to them for what is their advice. How do we get round this issue?
It's very, 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 very simple. I think Saylor might have said something like this or something. If someone says to you, "Well, Buffett thinks it's rat poison," and he's the smartest investor on the planet, and you say, would you ask Buffett which social media app you should be using these days? Probably not, right? I don't think you ask Buffett what technology you should be using. Should I use the iPhone or should I be using, the Android? Like, he doesn't know. You would know not to ask him that. So you don't ask him what kind of money to use, a digital money versus the print money that they just print funny money all the time. Why would you ask him that? He's a beneficiary from the Cantillon effect. He is closest to the money printer. In fact, during the crash, he went to Goldman Sachs and gave him a loan because nobody else would, and he got special preferred dividend rights and stuff like that. So you really have to look at these guys and say, like, well, what game are they really playing? He's embedded in the current game, in the current system, and he's winning tremendously. Nobody wants that to be disrupted. He's winning at it. Why would he want to disrupt that?
But would that be the same when we refer to the famous Mr. Schiff? Then he's got too much to lose. Sure.
No, he owns Bitcoin.
I was going to say,
I say it all the time. He's all in on Bitcoin. I say it all the time.
Yeah,
I believe he owns Bitcoin.
I can't believe
it's BS.
Son Spencer understands what he understands and is in that rabbit hole, and Dad not saying, well, come on then, teach me.
He knows his whole
smoke screen.
Think about this. If Peter Schiff was going on television and saying, I love Bitcoin, why do we need to hear this? What do you know about Bitcoin? You're bringing Jason Williams on there. You're bringing Pomp on there. You're bringing Tyler Winklevoss on there. You're not bringing Peter Schiff for commentary about Bitcoin. But you do need a talking head who has the opposite side of it. So he does have a place in the media spectrum by being anti-Bitcoin. That doesn't mean he doesn't really own Bitcoin. He can't be that stupid.
So, listen, we're 55 minutes in. I want to ask you a question. What would you say now? I feel, as a lot of podcasters do, and hopefully you do, that, people are going to find these in the future, down the road, be it this year, next year, 5 years, whatever. Just to give, you've obviously done very well for yourself in life, Jay. In terms of what you know about Bitcoin, give somebody some sound advice about what they should do, starting out with, your own in the rabbit hole, maybe 2 or 3 step process of what they should do if they know nothing, if they've just been told about it. I've got people, I orange pilled a guy yesterday that came to fix my front door, and he said he was going to come on the show today. He may be in the chat. I don't know. Somebody that knows, because he said to me, and I quote, he said, is it real though? Or is it a scam? What would you say to somebody just dipping their toe in, just playing with it when they know they could do more? Sound advice, maybe 2 or 3 steps.
People learn differently. Some people learn by reading, some people learn visually, right?
Yep.
So I would say if you're going to read, and you can listen audio, some people listen too. So if you want to read or listen, go buy Jason Williams' book, Bitcoin, Hard Money You Can't Fuck With. Great book. Great for a beginner,
Yep.
particularly somebody that doesn't read a lot. I'm not criticizing the book when I say that. I'm saying he created a great story about his personal experience, his introduction to Bitcoin, his understanding for Bitcoin. Him and Pomp they created a mining company, PRTI, and he talks about that and how the feds came to him and all kinds. It's great stories in this book. But he's also telling you about the history of money and inflation and the money printer and how that asset values are going up over time, but truly they're really not. It's the money that's being created. So it's a reflection of the money being printed and the supply going up. So the prices have to reflect that. It's a yin and yang, right? That's a great place. Another place, if you're more, if you want to watch like podcasts and stuff, I would just go on YouTube and look up Michael Saylor. If you could find the Michael Saylor interview with Ross Stevens from NYDIG earlier this year, they did that conference online, right?
Yep.
That was fantastic. And anything Michael says is pretty fantastic. He's a really, really smart, brilliant guy. But if you could listen to Michael Saylor and the way he talks about how the prices can get to where they can and how and why they can get there, it's rational. It makes a lot of sense. And then he talks about the inflation and this and that. Somebody asked him one time, like, well, what if the price is going to infinity, right? Because it's going to infinity.
Yep.
That's what people can't understand. Like, well, what's the high? There is no high, right? There's no high on the price. It's the same thing with like real estate, actually, right? Like if you went back in like the 1800s and you said, what's the price of this piece of vacant land right here? There's 2 acres or something like that. I would say, well, what's your time horizon? What's your time preference, as we say in Bitcoin, right?
Yeah.
Are we talking like the next 5 or 10 years? I have no idea. You want to ask me 100 years from now? I can tell you with absolute certainty, it's going to be higher. It's pretty.
That
obvious.
is why you can leave
inflation.
something for your family that can change their lives for generations. That's the key here, isn't
That's
it?
right.
Saylor says, I'm buying for 100 years. It's off the table for 100 years. It's interesting you say about that book. I'm a listener. I struggle reading, so I buy audiobooks. And I've just bought one, actually, and it was a toss-up between Jason's book and Nick Bartier's Layered Money, and I went for Layered Money. So I'm now going to go and have to buy Jason's book.
You got to listen. Jason's book is, I'm telling you, Brian, you're going to love it. It's really, really simple. It's an easy read, right? It's pretty easy read. And it sounds like he's talking to you, which I love books like that, right?
Yeah,
so you just listen to a conversation essentially.
Yeah.
And he talks about that history of money and he intertwines that with his personal stories. And it all just kind of comes together for people. And I was like, I've read the Bitcoin Standard and others, and I'm like, and it's a little complicated. I don't know what you thought of it, but Bitcoin Standard for a newbie who doesn't know anything about Bitcoin or anything about money, it's like, whew, this is
I had to read it
lesson,
3
right?
times. I had to read it 3 times.
That's right. It's. I don't encourage people to read the Bitcoin Standard the first thing they're reading about Bitcoin. That doesn't make sense to me personally.
So 3 things. So that was, where were we? Number 1 was that book. Two more top tips for our audience.
Well, the book I was saying, and Michael Saylor as well.
Sorry.
So
yep.
You got to consume information about that. I don't know if there's 3 really, to be honest with you. I think you just got to understand money. If you want to understand Bitcoin, you got to understand what's happening with your money. That is the key. Most people don't realize that. Like they save whatever, they put it in a bank account. I wish bank accounts would reflect your buying power, not the dollars you're sitting on.
Yeah.
That would make people say, let me get this money out of my bank account. Yeah. But like if you come into money, right? Let's say you have an inheritance for 10 or 20 or $100,000 or something like that, or you had a bonus at a job and you got $10,000 bonus and you have the net in your bank account. They see it as, I still have that same amount of money in my bank account. What they're not seeing is that, sorry, I just got something pop up. What they're not seeing is that you're losing buying power dramatically, actually. Like it's over 20% this year, actually, right?
I know,
so
it's crazy.
If you had $100,000 in the beginning of this year, and you were eyeing to buy that property across the street to say it was a vacant lot for $100,000, and you were kind of like sitting on the sidelines, I don't know, honey, I got to wait. I got to think about it. We should think about this, Guess what? Here we are 10 months later. That $100,000 piece of property is probably like $140,000.
Yeah.
And your bank account hasn't moved. This is what people have to understand. So you got to put, and they'll say, well, if I buy Bitcoin, it goes up and down in value. Yes, but the Bitcoin you have, one Bitcoin is one Bitcoin. You still own that Bitcoin. And if you smooth it out, I look at charts, just zoom out on the chart. If you look at the chart, I just see bottom left, top right. I don't see any of this. I just see it going up.
Well, it's
So I don't see the
interesting.
volatility.
It's interesting you say that, because when I put the price chart up at the very start of the show, I always have it on all, never 7 days a month. Sailor says it,
Yep.
doesn't he? You shouldn't be looking at daily, weekly, monthly, or even yearly. Maybe 5 years, 10 years out. Stop focusing on the day to day, because you will go brain dead. It will just freak you out, because, and the trouble is, a 5% drop when it's $100 a Bitcoin is not much, but a 5% drop when it's $500,000 a Bitcoin or $100 a Bitcoin is like, holy cow. And you can see candles like that. So it is very much, and that's what I want to get on this show. And I want my listeners to understand, this is, you need a long time. I always get this the wrong way round. It's a low time preference. You really need a low time preference, and that means think 5 years, 10 years, 20 years. If you're younger than me, my daughter Buffy, she's in her early 40s, your sort of age actually. I feel really old now. My granddaughter comes on who's 21. No, and I say to them, look, if you've got 10, 15, 20, 30 years of good strong living to go through, keep stacking those sats. Just keep doing it. Keep doing it. Stop looking at charts. Get on and enjoy your life, and let the sats do what they do. Because somebody who's in the chat, I don't know if you heard of Adam Meister, the Bitcoin Meister. I've been on his show. He's a great guy, and I followed Adam's show for 4.5 years, every single day, every single one. And he taught me my strong Bitcoin hand. He taught me you got to get over to people, and you said it a few minutes ago. One Bitcoin is one Bitcoin. So once we start measuring buying a car or a house in how many 100,000 Satoshis, we move away from how much is that worth in pounds or dollars. And we're in this transition period, aren't we, really, where people are just denominating it back in sterling in currency. And that will actually change. Jay, look, we've gone over the hour. It's been an absolute blast. Any closing thoughts for my audience? Where can they find you? What should they check out? I'll put your Twitter in the show notes after we finished. Anything else you want to plug?
Yeah, no, not really. I'm invested in a bunch of stuff, but that'll do what it will do. That's what it is, including Bitcoin. So I don't promote anything. And you can find me on Twitter, basically.
Fantastic.
Yeah, if you want
Can you
DM
just hold
me, I have open DMs.
Just hold me while I bring up my quote. I want to, because this is relevant to what you said earlier. Let's have a look at this quote. I love this one. If they spit at you behind your back, it means you're ahead of them. From Confucius. I thought that was absolutely superb. If they are spitting at you, people, they are behind you. You, whoever you are watching this, have got the opportunity for the first time in living human history to front run the banks, to front run nation states, to front run billionaires in getting into Bitcoin. And whatever you buy and whatever you build up, hold it, hodl it for dear life, and don't let anyone or anything take it away from you. Get in the rabbit hole. Learn about how you secure your Bitcoin. Learn about offline wallets, things like Trezor, etc., which is what I use. I can't say that strong enough, people, because I'll leave you with this thought before we close off, and that is not your keys, not your coins. So if you get hacked out of some money from your bank, they'll get it back for you. You go and screw up with your Bitcoin, there is no getting it back. So you got the first time in human history to take personal responsibility back from the banks. Jay, did you want to say something?
Can I say one thing?
Yeah,
one thing. I want to say one thing. So you mentioned that where you bought at first. You have what's known as margin of safety. Okay. Benjamin Graham wrote the book Intelligent Investor, which Warren Buffett always talks about. He was a mentor to him. Warren Buffett went to his university, I think it was Columbia, and he was his professor and stuff, right? That's margin of safety. People, what they should do. Can I share my screen real fast? Is there a way to do that?
Yeah, just share your screen, and that should make it your window, and I'll put your full screen if it comes up.
Go ahead. Tell me when you're there.
Hang on. No, we've not got it. I think it's coming in as another camera source. Hold on. Just bear with me.
Yeah, I just want to show people this because I think this is kind of wait, did I lose it?
I'm trying to get it on there. It's not coming up. It's not coming up. Let me try bringing in you as guest number 2.
How's this?
No.
No.
Oh, it's nearly there. I can see it. I can see
it
in
sharing
in my window. Yeah,
sharing.
I can see it. I think it's me. Hold on. Solo. Hold on. We might have it.
Okay. Am I the first one that did this?
Yeah, no, yeah, you absolutely are. And it is what it is. I can see it
there. It is. You just have to get me off of it. I see it behind me.
Yeah, that's easier said than done, I can tell you, because as soon as I try and get rid of you... Oh, hold on. No, it's gone. It's not letting me switch them over. It's there. I'll tell you what, hang on. I know how I can do this. Stay there. Nah, it's not letting me do it. It's not going to work, Jay. It's not going to work.
Okay. Yeah. So I could just walk them through the exercise very quickly.
Yeah.
Very simple. So what you want to do is you want to go on Google and just type in compound interest calculator, and you want to go to the page that says moneychimp.com. Like that's the one you want to look at because it's the one I use, so I know it's real. If you're making $50,000 a year and you put 5% of your money into Bitcoin annually, it's $2,500. If you take the years and you go out 10 years and you look at the growth rate for the next 10 years, and let's just say it's 65%, you'll have $374,000 on the first year of $2,500. So what I encourage people to do is, if you're making $50,000 a year or more, go to your employer and ask for a raise. They're not going to fire you. Just ask. Maybe they give you an extra $1,000. Take that money and put it in Bitcoin. It doesn't have to be a lot. It will materially change your life in 10 years. I really believe that's all you have to do. Putting it all in, you expose yourself to the volatility, which exposes yourself to your own personal investment temperaments, which could wreck yourself.
Yep.
I just encourage people, don't put too much in. Put 1, 2, 5% of your net worth initially, because if you get through the first 4 years, you're good. You got exactly what Brian has. You have a margin of safety. You're never going to want to sell it.
Fantastic. Jay, it's been an absolute pleasure having you on. Thank you so much. People, I'm going to leave you all with my social media links. Please retweet this if you enjoyed it. Jay's got a pretty huge following, so that will help me as well to get my subs up. We're always looking to do that. Jay, thank you for being my guest. People, I'll be back. Where are we? It's Thursday. I'll be back on Monday, 6 p.m. London, with my regular UK Bitcoin Master show. Come and join me then. Here's my top tip, people. Go and share the link to this video with 5 of your friends, even if they're not in Bitcoin, and say, just watch this crazy Brit. This is worth listening to. He's got a guy on there that knows his stuff. That's all I say. Jay, thank you. Thank you to everybody for tuning in. I'm going to leave you all my social media links. Jay, if you hang on to the end, we can debrief. I'll catch you all on Monday, people. I'm out of here. Cheerio.